Thank you, Sebastian, and welcome everyone. Thank you for taking time out of your busy workday to join us today for Home Street Bank Affinity Programs presentation on buying a condo. If you do have any questions, feel free to drop them into the chat, and Sebastian will jump in and make sure that we get your question answered. We're also going to have some time after as well for any questions. So we'll go ahead and take a look at what we're going to be talking about today. Buying a condominium, basically defining what's the difference between a condo and single family home, some pluses and minuses there. Then we're going to go into a first time homebuyer checklist, as well as some new homeowner considerations and a resources / recap type of section as well. And as always, end on a summary of our Affinity benefits program and what's available to you. And then, of course, the question and answer at the end. So first off, we'll start by defining what a condo is. And it's easier to start out by just generally defining a real estate purchase. Traditionally, when you're buying real estate, you're purchasing the land and the structure on top of that defined land. When you are purchasing a condo, you're buying the defined structure, and then you are buying a share of the land that structure sits on. So if you're buying a condo that say has 10 units on it, you're buying the walls and in of your unit, and you're buying 1/10 of the land that sits on. So to go over some of the pros and cons of purchasing a condo. First, you have location versus what you own. So there's going to be, typically you're finding condos in high concentration of urban areas. So that again, that's going to be where land is going to be at a premium. So that makes it more affordable if you're absorbing some of the cost with multiple people of that land itself while still getting a space to live in that area. The con of that is just that you're not purchasing the land underneath the building on its own. You're sharing that with other people in that homeowners association. And then we have affordability versus resale. So that makes it so that you're able to afford something in an area that you may not be able to purchase a single family home traditionally, where you have the big plot of land all to yourself. What that does on the other side is it does restrict your resale value. Condos in general are more sensitive to market trends than single family homes. And if they're likely to change in value faster than your traditional standalone home, just because you do not have full control over that land itself. The reason for that resale restriction is if you're not the sole owner of the land itself, or rather, if you are the sole owner of the land itself, anyone looking to come in and purchase that property, maybe they have other intentions with buying that. There's more options for them to do things with that property. Say if they want to turn that into if they want to do some construction and renovation on that property, they can't do that on a condo. It's just restricted to that. So that's why there's a little bit of difference on the resale on that. Okay, pros and cons continued. We have security versus community living. When you are in a condo, you have a lot of neighbors around, which makes it easier to lock up and go on vacation for extended periods of time. There's less points of entry. You may also have certain security features, such as gated perimeters, maybe a security service. So it's just easier to secure your property as opposed to sometimes a single family home. People may not notice comings and goings as much as if you're in a condo. And the con of that, of course, is also community living, because you're likely sharing walls. You're much more likely to run into and hear your neighbors more often. That can also be a plus, because some people like to have more of the social aspect along with their living situation. So that's a plus or minus. All of these can be kind of plus or minuses in terms of having security and community living. Okay, and then we have low maintenance versus fees. If you are looking to purchase a condo, you have someone else that's taking over a lot of the maintenance items and managing the larger repairs on the building. You're really just focused on your own personal unit or area that you're in, as opposed to trying to manage a yard, et cetera, and all that. The downside of that, of course, it comes with additional costs. Depending on your HOA, there can be a small HOA fee, there can be a very large HOA fee. It also depends on what sort of amenities that you're getting, such as swimming pools, gyms, etc. Okay, and of course, we do have continuing the pros and cons, amenities versus rules. So just as I was saying, HOAs may have access to things like swimming pools, gyms, tennis courts, lots of things, barbecue areas, things that you can that just come with the condo, as opposed to having to build all those things up yourself or pay for them outside of just owning a home. That may be included. Downside of that is going to be rules. So you are governed by a set of rules called CC&Rs, covenants, conditions, and restrictions. That can limit your freedom of, say, noise level, pet ownership. They may restrict what type of renovations that you can do, and even down to things as silly as displaying things on the outside of your home. It is important when you are looking for a condo just to get a good sense of what those CC and Rs are. So those covenants, conditions, and restrictions on living in there. If you see things in there that are going to are you are not going to like, that may be a sign that that might not be the right condo association for you. Okay, and the last of the pros and cons, we have condo association is the pro and condo association is the con. So every unit owner is a member of their HOA board or their condo association, which also has an elected board. They serve to enforce the bylaws, handle that maintenance, and deal with a lot of the disputes between vendors, between unit owners, et cetera. If you are looking to get into a condo, I would recommend that you become involved in the HOA, because like there is an elected board, they are going to be making decisions for the entirety of the HOA. So if you're not going to be on the board, at least understand what decisions they're making and how that's going to affect you. So if they're going to be if they're going to be looking to make renovations, keep up on maintenance, those are things that you're going to want to be involved in. They may even limit your ability to rent out the unit. The other part of that is you still have maintenance that you have to do on the condo. So you just want to be aware of everything that's going in, everything's involved with the condo association. Okay, we'll talk about buying a condo. What makes the actual condo purchase different than your standard single family residence purchase? So you go through the home buying process just as you normally would when you're buying a condo. There is an extra step though, because you have to get your condo association and project approved during the process of getting the loan approved as well. So you're going to need to know if this project that you're buying the condo in is going to be a established, a new, or as a conversion. So there are rules set up on approvals of condos. They do have various different things that we look at on the HOA in order to ensure that it's eligible for financing. Some of the rules are strange. Some of them are a little different, but you'll want to know what those are. So things like how many of the units are owner occupied, how many of them are currently rented out. That could have an impact on whether that condo is approved. Mainly that comes down to if you are looking to buy the condo as just a rental property off the beginning, there is a limit to how many current units in the condo are rented out versus how many are owner occupied. Going back to the new, established, or conversion, if it is a brand new condo, that means that the builder is, say, finishing up some of the units within the condo. Um, there are rules on when that condo can be approved. So the builder has to give up ownership of at least 50% of the units. So if the builders of the condo is still working on the project and still owns, say, 6 out of 10 units, you wouldn't be able to purchase that project until you have the other remaining condos under contract for sale to remove the builder from the majority owner of the units in there. Okay, if the project is established, we do look at other things, or not established, but if we're looking at the condos in general, there are things like if there's commercial space in as part of the condo. You're seeing that a lot now, where they're building commercial space on the ground floor, and then you have 3 or 4 floors above that that may be that are condos. There's a certain percentage that has to be commercial um, versus the units themselves. That's one thing to look at. If the project is a part hotel or timeshare type of situation, generally that's not allowed for purchasing. Another note on condos, just in general, is some of them look like traditional apartments, what you might see. Some of them are may look like those townhomes, row homes, and other ones may look like tradition, especially in the Seattle area, may look like traditional single family homes. Difference is going back to the original definition of, do you own the entirety of the land and the structure? So it's a good idea when you're looking at things and you think it may be a condo to have your realtor check the legal definition of the property. If it is defined as a condo, you do have to go through this extra step of getting the condo approved when you're looking to purchase the home. Okay, talking about financing options for a condo. Um, it is fairly similar to when you're purchasing any home. There are down payment requirements, can be as low as 3% for purchasing a condo. If you are looking at conventional financing, you do get your best pricing on condos when you get to 25%. Otherwise, it's generally a little bit more expensive, but most loan programs are available for purchasing condos as well. If you feel that credit might be holding you back a little bit, the FHA might be an option for you. FHA also does not really care if it's a condo necessarily in terms of rate. So if you have little bit lower credit and a really low down payment, FHA might be something worth considering if you're looking at a condo. And again, the newly constructed condos, make sure that you're going through me or your realtor to see how many of those condo units are currently for sale or transferred, just to make sure that condo can be approved for financing. Closing costs, generally you're expecting similar closing costs to your standard purchase. The closing costs are slightly higher on a condo because we do have to go through that review process with the HOA itself. And it looks like we have a question. I just kind of glazed right over FHA. A FHA loan is different type of financing from conventional financing. Conventional financing is typically risk-based pricing, and you have options for down payments between 3 and on up whatever percent. But if you're putting down less than 20% on conventional financing, you do have monthly mortgage insurance. It is risk-based pricing, as I mentioned, so less down payment, lower credit usually means higher rate. FHA is Federal Housing Administration, and that is going to be looser restrictions on credit. It is a 3.5% minimum down payment. You do have, on all FHA loans, you have monthly mortgage insurance. You also have upfront mortgage insurance. So it can be a little bit more expensive upfront in terms of loan costs, but it is an option for getting in to where you wouldn't be approved for conventional financing. Okay, let's talk a little bit about first-time homebuyer checklist. So you're in step one right now, which is attending a home buying course. This one is specifically catered towards condos. However, we're going to be going over everything that you would if you're not going through a condo. So if you're thinking about taking a first-time home buyer class, almost everything is going to be covered in this as well. So congratulations, you're at the first step there. The next step would be to contact me or another Affinity loan officer, because you're going to want to, you can get a consultation where we can go over your basic questions like um, how much can you afford? What's your monthly payment going to look like? How much cash is it going to take to get there? We can go over all of those things prior to doing any sort of application. Always happy to go through that with anyone who would like to discuss their options that are available and get a general sense of what you'd be qualified for, even if you don't want to fill out an application. However, you can get pre-qualified. Your application can stay open for about a year. What we're going to be doing in a pre-qualification is taking those initial questions and answers that we got about how much you're looking to buy, what's it going to cost you, and what's that payment going to look like. And we're going to put that all into an application and say, okay, all this is now a reality. We're removing a lot of the variables involved and saying, okay, here's what this potential purchase would look like. That can stay open for about a year, relatively low downside to doing so, in terms of you just need a credit report pulled along with your loan application and a few documents to get to the point where you can make offers on properties without any guarantee of moving forward. Okay, and part of that, once you do get a loan application in, here's a quick list of documents that will be required to complete that pre-qualification process. Think of the last twos. We go through everything in twos is the most general thing I think of when like 2-year address history, 2-year work history for your application, then bring that down. 2 most recent pay stubs, 2 most recent W-2s, and 2 most recent bank statements for all the funds for closing costs and down payment on the mortgage. And now, since you guys are University of Washington employees, that's most likely all the documentation that's going to be required. Now, I know there are a lot of UW employees who have additional self-employment income on top of their positions here. So if that is the case that you are self-employed, we would need 2 years tax returns at that point and 2 years business tax returns if you do have separate filed business tax returns along with that. Okay, once you've gone through your consultation with the loan officer and you've got your application in and you've got everything documented and you've been pre-approved for X amount with X% down payment, now it's time to connect with a real estate agent. And what you're doing in this part is you're building your home buying team. So one of them would be me. So I'm acting in your best interest, telling you what you're approved for and telling you what that payment's going to look like and giving you my best good faith effort estimates on what those loan costs are going to be, what that mortgage payment's going to be. You also have your real estate agent who is also going to be acting completely on your behalf. So this is going to be someone that you are comfortable with, someone that you trust to act in your best effort. If you ever feel like a real estate agent is just pushing a property on you that you're not totally comfortable with, maybe time to take a step back and see if there's someone else that, because they are acting in your best effort or best interest. So be sure that you find someone that you're comfortable with and can trust. We do have some great affinity partner loan officer or affinity partner realtors in your area that can help. Not only do I trust them to act in your best interest and provide you with excellent support, they also are able to provide you with some credits towards closing costs, which I can cover in a little bit more detail in the last slide. So up to this point where you have got your pre-qualification taken care of and you've got your agent, you've built your loan team, this is the point where you can take your time. You get to take your time with the pre-approval, do it whatever pace you want. take your time at finding the real estate agent, whatever pace you want. You can look at houses at whatever pace you want. And it's really the time to be comfortable with everything up to this point in terms of costs and what is involved in the process. Because once you go to the next step of making offers, that's when you start becoming financially liable for things. You start having to pay for things. And you have a timeline of from beginning to end of when things need to be done. So enjoy this early process because you do not have as much time. Once you do find a house and make an offer, it's typically 30 days from when the offer is accepted to when you are the owner of the house and the loan closes. So once you've found your home, the real estate is going to take the pre-qualification or pre-approval letter from HomeStreet and submit that with their offer. They're also going to go over any contingencies and negotiate terms and conditions of the um, of the offer and go over everything that's involved in that purchase and sale contract to advise you best on what's in there, what's in place in that contract to protect you, like such as the financing contingency and the financing is the biggest one. There could be a price escalation, could be an appraisal contingency, an inspection contingency. So made the offer and the offer is accepted. What's next? These things all tend to happen at once. So once your offer is accepted, you're going to need to have your earnest money available immediately. That's going to be the first expense that you have in that's involved in the home buying process. And the earnest money is a portion of the down payment or an advance on the down payment that says that's a good faith. I'm making an offer in good faith on this property. And that's going to be held by the escrow company until the closing of the loan when it's applied to your down payment and closing costs. So if you are looking to make an offer, make sure that you have, typically it's 1% of the purchase price, but it can vary drastically depending on your offer. But point is to have those funds available if you're making offers, because you have to generally have that to escrow, which is the third party that holds the funds, within 3 business days of entering into the contract to purchase a home. Okay. That same time, you're also going to be ordering a home inspection. Home inspection is for your benefit. The bank does not get a copy of the inspection. We don't want a copy of the inspection. The home inspection is going to be completed by someone of your choice. They go in and they're really going to try and tear that property apart as much as possible. Things like looking at the age of all the major systems, checking the state of the roof, getting up into the attic and down into the crawl space, trying to look for anything that would be a red flag that would tell you, maybe hold off on this offer a little bit based on what I'm finding in this home inspection. And they're going to have a list of priorities for what needs to be worked on, what needs to be addressed before closing, if something needs to be addressed immediately, if something needs to be addressed in the next few years, or something that needs to be addressed long term. And they're going to put all that together. Once you've satisfied that condition, then you move on to I'll just cover the appraisal now, because oftentimes people might confuse appraisal and inspection. So the appraisal is something that as part of the loan that's required to get a loan. And the appraisal is also an inspection, but it's just looking at the property for comparable sales. We're looking to support the amount that you've agreed to pay for the property. So it's looking at similar. So if it's a 2-bedroom condo, how many other 2-bedroom condos have sold for $350,000 in this neighborhood in the last couple of months? They sold for relatively the same or more or less. What's different about those? And they come up with a number to appraise the property at. You're not going to find anything in an appraisal that's going to say like there is an issue with the major systems of the house that would say, okay, we need to get out of this property. So that's why you would use a home inspection to find any major red flags that would come up after you've become owner of the property. Okay, you also need to notify me, your loan officer, that you've entered into a purchase and sale agreement and forward a copy of that over to me as soon as possible. The reason that you want to do that as soon as possible is so we can get things started for your loan approval process, because we do have that generally 30-day window to complete everything on the loan and get you your money and get you your loan approved and everything finalized for the purchase and sale agreement on the property. Now, this is also the opportunity that you have to lock in the interest rate. So everything on all the cost estimates to this point have given you an idea of what your monthly payment's going to be. This is now going to be revised based on, so you have to have a purchase and sale agreement in order to lock in your interest rate. And once you lock in that interest rate, that's when we're freezing that pricing and you know exactly what your monthly mortgage payment's going to be. Continuing on, another thing that you're going to need to do for when you're purchasing a home or condo is you're going to need to get homeowners insurance. You do get to select the homeowners insurance company for your new property. It is paid through your mortgage. However, you do get to select the company. For a condo specifically, each condo is going to have a master insurance policy that covers the entire structure. And it is possible that with a lot of the HOAs that master insurance policy does apply to what you would call walls in, which is covering everything in your unit in addition to the entirety of the structure. So it's possible that you may not be required to have additional homeowners insurance on a condo. That's not going to be something we would know until we would look at the master insurance policy for the condo itself. Now, if you do have a condo and it is walls in, which means they're covering all of the anything that a normal homeowner's insurance policy would cover, I still would recommend that you chat with an insurance agent and say, here's what's covered in this master insurance policy by the condo. Where are the gaps in this insurance? Should I get some additional insurance? So that would not be required to be part of the mortgage in that case. However, I would still recommend that you talk to an insurance agent and make sure that you're fully covered to the extent that would for insurance. Okay. So going back to the appraisal a little bit, you do also need to notify me once your home has passed the inspection. So you go through the inspection, no major red flags. Say, okay, inspection's passed. That's important because that's when we want to order that appraisal. We do not want to order the appraisal until we are sure that you're moving forward on the condo. So please get that appraisal done quickly so that we can move on to the next step, which is ordering the appraisal. And then simultaneously as that's happening, we're getting your loan approved with all the income and asset documentation that you've provided and the appraisal to get your loan fully approved so that we can move you on to the next phase, and as well as the condo approval is happening during that time as well. Once we have your underwriting approval, a copy of the appraisal, and the condo approval, then we move on to the signing of the documents and closing of your loan. So be prepared the week of closing to make sure that you're available to sign. This is typically a hybrid process where you're doing half of it with DocuSign at your own leisure, and then you do need to meet with a notary to go over some documents that do need to be signed in the presence of a notary. At that time, you're also going to be wiring the remaining down payment and closing costs to escrow. And so you will need to be prepared to either send over a cashier's check or wire those remaining funds to the closing agent. Okay, I'm going to go over a few new homeowner costs for consideration. Some of these are more or less apply to condos, so that's something to consider as well. Real estate taxes would be the first one. Again, this is part of your mortgage payment, but it is part of what makes a mortgage a little bit more expensive than renting sometimes. It's because you do have your principal and interest portion of your loan. You do have real estate taxes. You do have homeowners insurance. The HOA would not be a part of your mortgage payment, but it is part of your monthly consideration. So just be aware that you do have the real estate taxes that you are responsible for. Okay, so also the different types of utilities, it's important, especially with condos, to make sure that you are aware what is included in the HOA fees, and make sure that you're aware that when you're looking to buy the property, you're factoring in your mortgage payment. Plus, if there's no utilities covered, what are the different utilities, gas, water, sewer, garbage, whatever it is. Make sure that you're aware of what all those costs are. Are there setup fees to get everything going? Just to be aware of all of those different costs that are included with setting up those new utilities, and making sure that especially if you have to customize anything within your home to set up those utilities. Okay, just already touched on the homeowner's insurance. Again, for condos, this is likely cheaper or may not be required for condos. Next up is furnishings. You're moving into a place that you're hoping is going to be much more permanent, probably willing to spend a little bit more on things like furniture. Custom blinds add up really quickly. So after you've made this huge investment of your down payment, your closing costs, now you also have to fill this new space that you have with probably some custom things, some things that you really wanted to make the home really truly your home. Okay, also want to be aware for repairs and maintenance. So you've got your home inspection. You've probably highlighted a few items that need to be addressed immediately, or some things that you might want to prepare for in the near future. So a good idea to start a separate savings account for that repair and maintenance to help track your expenses and be ready for unexpected repairs. And just being prepared, continued, even if you have the best laid out plans. I would expect, just in general, for something to break or go wrong on a monthly basis, just because if it doesn't, then that's a bonus and it feels better than, oh no, something broke again. So make sure that you have that savings plan and anticipate needing to just repair something or fix something. It's not as easy as just calling up a landlord and saying, come fix this. You have to actually go through and get everything repaired. Um, so, and in that, make sure your first priority is to have enough in savings in order to make your mortgage payment, your HOA payment, just because you're trying to avoid anything that would lead to a potential default in the loan. Okay, so resources here. This is just going to be an overall summary of everything I went through. Again, you are here at the first step, which is just getting some general information on the home buying process and condo buying process. Next step would be to give me a call and go over all of those, get those, again, those basic questions answered. How much can I afford? What's a potential monthly payment going to look like? How much cash is it going to take to get me there? And then what does that look like for a potential purchase price? And what timing would that look like? Make sure that you're prepared. Then you would apply for a mortgage, get all those estimates lined up and make sure that that's a reality. Then connect with a realtor and view properties. Once you're at that point, you have your pre-approval with your loan team in place, time to make an offer and sign a contract. That's where you start accruing expenses like getting your home inspection, ordering the appraisal, um, and getting your loan approved. Once you have your final loan approval, you're moving on to your final signing of the loan documents, transferring your money. Then we would release the deed of trust to record with the county. Once that deed records with the county, then you are officially the legal owner of the property. You get your keys and you have move-in day. See another question come through. Can you go over the difference between a condo and a townhouse in terms of the buying process and return on investment potential in the Seattle/East Side area? Yeah, the difference between a condo and a townhouse is going to be whether the purchase of that property includes the entirety of the land underneath it. So if a townhouse and a condo can look almost identical, but you are the defined owner of the space underneath of the unit all around in a townhome. And so that entirety of the structure and the land is yours. If it's a condo, it's still a shared structures that are sharing a split of the land. And that's going to be found in the legal definition to be most sure on what you're buying if you're looking at a condo versus a townhome. And then on return on investment potential, in general, the condos have slightly less return on investment, but it's not a set in stone rule. Really depends on the specifics of the type of condo, location, all the real estate basics. So I guess the best advice I could give on that is if you're buying something that you really enjoy, or that you really like, it's likely that somebody else does too. So that's just something to think about if you are worried about the potential of gaining or losing future profits on that property. Really, what it comes down to is if you buy the home and it makes you happy every day when you go home from work and you enjoy living in that space, really not a huge downside, and you're not as worried about um, the potentials of the current market value of the property. Okay, we'll wrap up with the summary of Affinity program benefits. Of course, we have our cost savings. HomeStreet Bank is able to provide you with credits towards your closing costs on a purchase of a primary residence or a second home. We also have participating realtors who can provide additional credits on top of that. So what we're really looking to do is try and take away as many of the closing costs as possible when you're looking to purchase a primary residence or a second home. We do have exclusive workplace checking and some discounts on new vehicle and personal loans. If you found that the 3 to 5% down payment range is not quite a reality yet, be sure to reach out to me. I'd be happy to go over any sort of down payment assistance programs that are available in your area, or if you think someone is interested in that, please send them our way and we'd be happy to discuss down payment assistance. Also keep an eye out for future financial fitness webinars. So a lot of different types of home buying webinars, credit webinar specifics, etc. So be sure to check that your benefits website regularly to see what is going to become available in the coming months. A reminder that these benefits are available to immediate family members. So maybe you might not be interested in purchasing a home right now, but your parents are or your children are. The same affinity benefits are available to be used by your parents or children. And be sure to just contact me if you have any questions about potential availability on that, on those benefits. And a reminder that these are exclusive access benefits, and you need to contact me as an Affinity loan officer in order to get those benefits. Other loan officers, just because they're at HomeStreet, doesn't mean they can provide the benefits. So you do have to go through an Affinity loan officer in order to get these benefits. And I see we're starting to get some questions. So before we hit the questions, if anyone's not sticking around, thank you again for attending. If you have any questions directly, you can see my contact information there. And a summary of the benefits can be found at homestreet.com/UW, or you can scan the QR code there. And then I will turn it back over to Sebastian to moderate some Q&A.
Awesome. Thank you so much, Ryan.
Yep.
Wonderful presentation. And yeah, please leave that QR code up there. So in case anyone
Yep.
wants to reach out to you. So I think we did get a couple questions. Sharon asked, does this apply to Washington State only?
No, this applies to any of the states that HomeStreet can currently lend in. Mainly we're West Coast, so California, Arizona, Idaho, Oregon, Washington, Hawaii, Alaska. and I think that covers it. Maybe Nevada. Unfortunately, not Kansas. I'm sorry.
Great question, Jaron. Um, Another question here from David. Do condos usually include the kitchen appliances and washer and dryer, or are these extra expenses in some cases?
Generally, yes. Generally, that also would be defined on your purchase and sale contract. But in most cases, they are going to have your basic refrigerator. Um, if the condo unit has washer and dryer in unit, usually that's in there. But that would be something that you would double check on with your realtor and make sure, like, if you go through and tour the property and you see all of those appliances, just make sure that they're checked, that they come with the purchase of the unit.
Thanks, Ryan. And
Yeah.
yes, I also want to mention, let me just check. If anybody else has questions, you're more than welcome to unmute yourself as well. If you would like to voice it yourself, or yeah, use the chat or Q&A. But Um, but while we're waiting for questions to come in, Ryan, I just want to thank you so much for taking time out of your
Yeah.
day to share with us all the information you have so far, and also always being a resource here to us at UW. We love having you guys here, and I also want to mention we will have one more Home Street event next month in August, and that may be the one that we'll be having for the rest of this year. I think we'll be planning out schedules for next year. But as far as if you have any Home Street questions, obviously you're more than welcome to reach out to any of the loan officers at any time. But as far as webinars go, I think next August will be our last one for this 2025 year.
That's great. Yeah. Thanks again, Sebastian.
hmm Um, okay. Doesn't look like we have any questions yet, but maybe hang out here for another minute or
Yeah,
two.
absolutely.
Let's see here. I'm go ahead and pause the recording as well.